money. Index fund investing is a long-term wealth building tool, and the way you make the most money and build the most wealth by investing in index funds is by investing money consistently into the index funds and investments that you have. So this is investing money every week or every month into your funds. Now, investing has risks, okay? You are never guaranteed to make money when you invest. You might even lose money. So make sure you always do your own due diligence and never blindly listen to a random guy on YouTube. But let's take a look at this. So VOO is an index fund created by Vanguard, and VOO invests in the top 500 companies in the stock market. Okay, so VOO is that index fund and invests in these top 500 companies. So now what you can do is you can invest into this fund. Again, I'm not telling you what to buy, just an example. And this fund gives you exposure to the top 500 companies. Between November of 2010 and November of 2020, VOO, this index fund, returned an average of 13% a year over the last 10 years. This doesn't mean that the fund went up by 13% every single year consistently. It means some years it went up more than 13%, some years it went down by 13%, but on average over those 10 years, this fund went up by 13% a year. Let's put this in perspective. Let's say you had $10,000 and you put this money into the bank. And I'm going to be very generous, and I'm going to say that your bank paid you a half of 1% a year in interest. If you did that over 10 years, your $10,000 would grow, and it would grow to a whopping $10,500 after 1 decade. If you put your $10,000 here into this index fund that gave you general exposure to the stock market, then your money would have grown from $10,000 all the way up to $33,000. And this is on the side without you doing any work. You just put your money in and then you go do something else. Now, I get it. Hindsight is 20/20. Of course, it's easy for me to look back and say, hey, you should have done this. But this is the reality of how investing works, okay? If you don't take risks, your money is not going to grow. Again, past performance does not indicate future performance, but let's just assume for a second that you can maintain that 13% return that we just saw in the previous example. But let's say that you don't have $10,000 to put into an investment. So instead of putting $10,000 cash into an investment, you do something a lot smaller. You do $250 a month. Now, whether the fund goes up or down, you're going to put $250 a month every single month into your fund, and you're going to do this no matter what, and you're going to do this for 10 years. So for the next 10 years, you're going to keep putting $250 a month into your investment, and over those 10 years, you will have put $30,000 into your investment. But assuming you get the same average return, your $30,000 will have grown to $63,000 on the side. But let's keep going. Let's say you do this for another 10 years. Now you will have put aside $60,000. So this is 10 years, another 10 years, over 20 years into your investment money. But because you're investing this money, you will have grown this money to over $270,000. You got more than $250,000 in your investment account because you're investing this money passively. Again, this is assuming you got a 13% return, but I got this number from the last 10 years of how the stock market has grown and how these index funds that match the general stock market have grown. I'm not saying this is what's guaranteed, but I'm showing you what's possible if you invest your money. And the great thing about this is this investment is passive. You're not trying to find the best stocks. You're not trying to research other companies. You're just putting your money into an investment that's investing in stocks for you. The reason so many people don't do this is because investing in passively managed index funds is not as cool and it's not as hot as trying to find the next Tesla or Amazon. The reality is building long-term sustainable wealth and growing it in the stock market is not easy. Yeah, it looks easy when you're in a bull market because everybody's making money. Then it's easy. You can just throw your money anywhere and you're going to make money. But when things go bad and times get rough, which will happen, you have to anticipate this. This is where you have to have a strategy. And if you are investing in index funds, it's all about just consistently investing every week or every month and letting your investments grow and compound over time. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.